at the point as per the what is the commercial law importance? What is the commercial law importance? The commercial law importance, some companies, we discuss taxes from 1st June 2023. If the company is registered on 2nd June 2023 till 30th June 2020. Now, this is the one of the period where the company is subject to the taxation. This, I'm saying the new company that was incorporated 2nd June till 30th June of 2023. So their first return was due. If the company is registered on 1st July, or we can say the after 1st July, because here the test is the 6 month. Or we can say the after 1st July, or here we can consider it normally is the 30th June, but we'll count. But here if the company is registered after 1st July, their first books of accounts, if the accounting period Jan to December, in this case, is subject to the tax return for 7 months or 6 months plus 20 days, 30 days, whatever the days. These are the duration, right? So their first return was open. And mostly people are not familiar at the last moment because they were expecting their return will come next year. But their return was open. Why? Because based of the commercial law. Here the postman of the deadline as per the FTA decision number 2024, the law reference is here. Now I'm going to give you the example over from the tax return. This is the incentive is given to the such companies who registered in this phase. Who was incorporated, established, or recognized on and after. The first point, very important. Who was incorporated or okay. Even the law is saying the establish is have the one on meaning, recognize is the on meaning. Establish if you registered the license, recognize even you don't have the license, but as per the taxation regulation, you are meeting the taxable person definition. You are tax through, you are subject to city. Even the FTA, the screenshot we've seen, they mention with trade license or without trade license. Without trade license, their activity or the operation is recognized is subject to tax. Okay, so the company who's registered on and after, but before, here we can say the first, just as a reference, July 2023. So their deadline for the return was open. So therefore, because it's exceeding 6 months, So that's why the first financial period ending is December, and due date was the 9 month. So this is the 9 month, and as a new regime, the people was not familiar. So on the last date, FTA given this decision as the extension, as they extended to 31st December. So they submitted the return over here. Even from 1st January till 31st October, the deadline, because financial year ending is December, is ending on January, and then this is the decision. If any accounting period, tax period ending on or before this date, based on that, their deadline for submission is this, but they said no, the extension now is this. And this decision was effective from 25th September. This is the last week of this return submission. Here, the same extension was given to the UIP also. Not UIP, Family Foundation also. Family Foundation, the same thing or the same relaxation is given to them also for the first tax declaration, where they want to be treated as a transparent. They want to apply for the transparency. The dates are different, but they also have the same advantage. Here the further details, the same what we discussed. Because first tax period will be less than 12 months, but more than 6 months, 6 months, or after that each will be 12 months. Next each will be 12 months. Okay, UAE city rate in UAE city law. Taxable person. Now we discuss what we discussed. Taxable person, taxable income, tax period, but now tax rate. Tax will be paid by taxable person on taxable income as per the tax period on what rate. This is what we're gonna discuss. So what is the difference city rate in the UAE? City rate in UAE. Taxable person, mainland non-qualifying free zone person. What they said? The mainland LLC companies, commonly we use LLC. Non-qualifying free zone means it's free zone, but it's standard rated. Standard rated maybe non-qualifying free zone person, or they opt for the standard rated, that is 9%. Foreign permanent establishment having PE in UAE. This is the foreign permanent establishment having in UAE. Okay. Taxable income or profit up to 375 is 0. Above is 9%. Effective tax rate is not 9%. Why? Because the first 375,000 profit is a 0. So if we, how much the actual tax we pay, it will not be equal to 9%. Just as an example, I can give you the example. Maybe I think is already we mentioned over here. Taxable income is 1 million. The first 375,000 is 0 rated, 0 tax. Then 1 million minus 375,000, balance is 365. 1 million minus 375,000, balance is 625,000. What is the tax rate? 9%. So this much tax we gonna pay. So how we calculate the effective tax rate? Amount of tax, that is how much we are paying. Amount of tax, what we are paying, 56. And what is the taxable income? What is the taxable income? 1 million. So please divide and see how much it will coming. if we do this calculation, it will be 5.6%. This is the effective rate of tax, because up to this, we are not paying the tax, is zero rated band. We cannot, okay, why we are doing this? Because we have to do the calculation. How much the cost or how much the additional cost is added to our product cost or service cost. So effectively, we can increase our cost or the profit margin, the profit margin due to the taxation, 5.6%. But as the outcome, we say, okay, I'm paying the tax to the client or the customer, so now I'm increasing our prices. Normally, this is not the case. So we are normally using due to inflation or the taxation, common term. So we increase our price. How much will be increased? For this business, 5.6 will be increased to cover the taxation. The idea for effective rate is one of this, and further also we will use in the taxation. Second, in the small business relief, if the revenue, okay, search point or the information, here is the guideline reference. If anybody want to search, he can search also. But if you ask me, this is the link also. If you want to take the picture or screenshot, you want to search, I will share the such links also. That's not a problem. Okay, relief for tax period starting from 1st until 31st December, SPR relief, if the revenue is less than 3 million. How will we calculate the revenue? How will we calculate? Business income, other income, exempt income, and see whatever that total will be calculation part of the threshold. Then we will test 3 million. So maybe the people 2.9 million other income, as a other income, you receive 100,000 and you are already exceeding the 3 million. But they didn't count the other income, so wrongly they opt for the SPR. Okay, now the next, qualifying free zone. What is the qualifying free zone? Qualifying free zone is a special area in the UAE. But here, if you ask professionally, first we have to understand what is the free zone, because today in the market, all free zones saying we are subject to zero rated city. Even you commonly see in the marketing ad also, zero rated. How come they saying come register with us and tax is zero? And even their sales team, they're giving you the same information. And we have seen in the market and with the other colleagues and the fellows, they said, how come they are saying zero rated? There's many confusion, because the investor getting attracted based on this. And they open the company in the free zone. They're saying it's zero rated, so I'm going to save the 9%. So how come? So this is not the 100% truth. What they're saying is correct, but this is not the 100% correct. This is, it is the same like if we, I'll take the example, if we registered as a in university for MBA or any other degree for ACCA or CA, ICAW. The first part we did the registration, but there is a certain exam like the 4-year or the 14 exam we have to pass. Then we will say, okay, we are the ACCA, right? So same thing. Yes, you they may subject to zero upon what? Upon the activity, what the business will do. This is the exam, this is the assessment. If the business activity or operation is aligned as per the FTA guideline or the tax guideline city regulation, you may subject to zero. If no, then you are 9%. Then you are 9%. So now here, another two things are coming. I'll mention the fenced free zone and non-fence free zone. I'll mention the gated community, non-gated community. What does mean? Hope you all understand from the gate. If free zone, they have own boundary with security system, everything. This is called gated community. This is called the fenced free zone. As an example, safe zone in Sharjah, safe zone in Sharjah, Jabal Ali free zone, Dubai airport free zone, then Ajman free zone, many more than 50 free zone, but all of them is not the gated community. Most of them is non-gated community. Non-gated community. So most of the approximate 30 plus will be fall here. Like the DSO, Dubai Silicon OCS, there is no boundary wall. Anybody can go, no security is checking. Anybody can take the shipment, take out the shipment. So this is called in non. Now this difference is also have the important factor based on the zero rated or qualifying activity are the subject to zero. So all the activities in the free zone not leading to the 0% based on the other criteria. Only the gated community for the distribution activity have the advantage. Trading business, this will be allowed only here. Other all activity you can do here or here, and the criteria is met, is subject to zero rated. But while registering the company, you are not subject to the zero rated. This is the one of the misconception or the misleading marketing. On their website is written, and they are even they knows they are not, mostly the sale people are not familiar. So they know only the tagline. As a tagline, they are subject to zero rated. And the people we seen in the market, they come up for the city return, they saying, okay, it's zero rated, submit the return, blah, blah, blah. When we seen in the further details, they are not subject to zero rated. And they start arguing. They said, no, they are given a free zone given us. I said, okay, bring the document where they written you are subject to zero rated. The client is insisting. We're saying, okay, bring the document. So here, very critically are very critical factors to analyze while registering the company for the investor, for the businessman. Maybe this one company is doing the distribution activity. And if he register in the safe zone as a gated community, or the DAFZA or the Jabal Ali, if let's assume other conditions are met, is zero rated. But they didn't aware about that. Their PRO or their business consultant, they did not guide about this. So they registered company in DIAS. So IFZA, distribution is a trading. Okay, now they're saying, yes, we are doing the goods like we are buying from China and we are selling to, let's say, is UK. Our product is not touching the UE land. Our product is not UE land. So this is we call the high sea sale. We got third ports sale. Why I'm explaining this much about the qualifying free zone? This is the one of my core strength for the free zone. My core strength, why? Because I spend a lot of time on the free zone as a industry experience also, and as a taxation also. So now even here, what is the substance? There are many other criteria to get the zero rated, many other criteria, but I'm just giving the basic. Okay. If now company is registered here, they're coming and some asking for the return for zero rated, and some already did for zero rated, and they said, why you are saying the 9%? So when after the 3-4 hours consultation to inform them, to realize them, they said, this authority is saying, I said, go and check with them. When they went back to them, they said, please check with the consultant in the market or our consultant that are subject to separate charge. We don't know about this. We know this free zone about the 0%, but we don't know about your company. You will submit return zero rated or 9%. They said, we don't know. This is not our jurisdiction or the scope. We give you only this business license. You already have the license. So now the investor is saying, no, you are the one who given me the consultation. He said, yes, I said what is right is zero rated our free zone, but I'm not saying about your free business activity that I don't know. So as a result, maybe this saves minimum nominal amount of the consultant before setup of the company, and now they are ending up with the 9%, and it will be remain continue. If the same company was here, is good, here is not good. Here is a halal, here is a haram. The cost. Now, if they want to switch from this free zone to here, so what is the option? What is the option? If, let's say, if it's Jabal Ali free zone, okay, let's say if there is a Jabal Ali free zone, maybe they will give you the NOC. This is called the re-domicile. Maybe this in term of the company, people not commonly familiar, the re-domiciling of the company. Yes, the DSO authority will issue the NOC to switch the origin from DSO to JAFZA or DAFZA. They are not liquidating, they're saying the re-domiciling, there's NOC, they shift from here to here, but here again, everything on license will be changed, but name will remain same. Bank account they will carry as the amendment they can submit. But this is also initially is happened, but later on I think the free zone not taking up with this. Even the safe zone is not accepting any kind of such activity. They are saying no, come up with us, close this company and open the new company with us. Yes, we can give you the same name, but close this company, open. So now closing the company is a liquidation. This is the cost. So you have set up the office, make the team, made the visa, made many costs. After spending all this cost, you come to know the decision we took is not the good for the company. On the other side, we have the much better advantage. I'm not saying anything illegal. I'm saying see the cost benefit analysis for your business activity or operation. Yes, as part of the business setup consultation or the support, we are familiar with the practical scenario because we are part of the different free zone as the channel partners. We are doing the consultation, we are arranging the company setup for them, and many other support with them. So this is the reality I'm sharing, or the facts I'm sharing to you guys also. Okay, anyhow, this is not our main agenda. So see the taxation. Okay, then qualifying income. If the qualifying free zone, qualifying income is zero rated, halal income, but detail we will discuss later on. Okay. Now the same qualifying free zone, they have two activity, qualifying and non-qualifying. What is the qualifying income? Yes, we will, this is the approximate 2 session will take the qualifying free zone. Here the main structure we are understanding. Non-qualifying activity, pass the minimum test, the minimum test. If yes, the qualifying income, this is the QI, this is the NQI. If the minimum test is threshold, if we pass, then the QI, qualifying income, non-qualifying income is 0 rated. If they didn't, okay, the qualifying income, QI, non-qualifying income, no threshold. 375, no threshold. Qualifying income subject to normal rule, optional. If he's not paying the tax, then what is the advantage to have the 375,000? Company is not paying the tax, so what is the advantage to use the 375? There's no advantage. Now, even they are qualifying the 0 rated, they can opt for the standard rated 9% tax. Now, this common question is coming, if he's saving the 9%, then why they are gonna opt for the standard rated 9%? This for the big corporate, the group structure, based on that, many other advantage they can take. So this is from the group perspective. Yes, it may be beneficial for them to have the standard rated. Qualifying group cannot join the group. Corporate tax group, if it is 0 rated, qualifying group, it cannot be part of the corporate tax group. Anyhow, now if test is failed, qualifying income plus non-qualifying income 9%. What is this test? Of course, we will understand. Qualifying income plus non-qualifying income, if test is failed, is 9%. Both subject to 9%. Up to qualifying income is 0 rated. Other non-qualifying income is 9%. Multinational entities. This is big corporate culture. Their taxation is different. Top-up tax is a 15% for the multinational, but there is a certain threshold. Consolidated revenue of the group of the worldwide is 375,000 euro or 3.15 billion AED. Next is the type of the vehicle. Now we are coming to the next type of the vehicle. What is the type of the vehicle? I think we already complete the 15-minute approximate. So before starting this topic, let's have 15-minute break and resume again. It's important to have coffee, tea to show the energy in the session.